Hello, and welcome to Loyola Marymount University. My name is Dennis Draper, and I'm the Dean of the College of Business Administration. Each year, we are fortunate to bring in a number of prominent business executives and special guest speakers to participate in our CBA lecture series. From high-ranking government officials, to leading journalists, to internationally acclaimed social entrepreneurs. All of our distinguished speakers share one common goal: to educate our students and local community on some of the biggest issues in global business today, all while reinforcing LMU's underlying mission of teaching business with ethics and social responsibility. Thank you for watching, and I hope you enjoy the presentation.
So, good evening. I'm Larry Calbers. I'm the R. Chad Dreyer Chair in Accounting Ethics and also the Director of the Center for Accounting Ethics, Governance, and the Public Interest. And thank you for coming to our speaker series tonight. I want to thank a couple people, especially Nancy Donovan. Thanks for all your hard work, and all of her students as well. Natalie Durdek. And thank yourselves for coming tonight. All right, Sarah. And if we're pretty full here, we are also doing a live stream up to Hilton 300. So if you don't have a seat and you want to go up upstairs, that's good. It's nice to see somebody in person, though. So I'm going to also say that please stay seated until our Q&A is done. So Mr. Menendez is going to do a presentation, and the Q&A is the most fun, and he likes answering the questions, so please stay around for that. We'll have a mic coming around for you to ask those questions. We'll also have a reception immediately following, right out in the foyer, so there'll be some good food, and if you want to talk to Tony, that would be great as well. So let me give him a quick introduction. He earned his bachelor's degree in accounting from the University of Houston, where he spent a substantial amount of his life. He has more than 20 years of experience working at or providing technical accounting and reporting guidance to some of the largest public and private companies in many different industries. He spent quite a bit of time in public accounting, where he was a senior manager at Ernst & Young. When he took a position as the director of technical accounting, research and training at Halliburton in 2005. Of course, that is the position which changed the course of his life and is where the story he will tell tonight began. After leaving Halliburton, Tony has held several positions and has provided litigation support, while also spending a significant amount of time on his legal and ethical journey. Currently, he is the controller, U.S. Sales, Service, and Marketing for General Motors. Has to live in Detroit. Sorry about that, Tony. And he gives tremendous insight into what it takes to be a corporate whistleblower in America. Please join me in welcoming Tony Menendez.
Well, thank you, Larry, for the kind introduction, and thank all of you for showing up. This is a long time in the making, if you will, and I'm very proud of the fact that I get to stand here today and actually tell my story, because that's really the only thing I hope to get out of this, was that people could benefit and learn from my experience, so hopefully others don't have to experience it. So let me just get right into it. So I'm going to start this discussion about Sarbanes-Oxley and the importance of Sarbanes-Oxley, because that's really at the crux of what I went through. So some of you guys are pretty young, maybe you weren't even around when Enron fell apart and everything, but it was a significant time in the accounting, reporting, and investors in 2001, 2002, and we had some of the largest bankruptcies to ever occur. And so the Congress and those that were really struggling with, well, how did this happen? How do we prevent something like this from happening? And so they did a pretty big investigation of what went wrong at Enron. And what they found out was that there were people on the inside, whether it be at Enron or Arthur Andersen, that were raising objections, but they just weren't being heard. People weren't listening. And in fact, so it was so widely publicized. They were having congressional hearings, so they had a congressional investigation. They had subpoena power, and they were rummaging through tremendous volumes of documents to kind of uncover what went wrong at Enron. And one document in particular is really important for me that they uncovered, and it's this email here. Because the first thing that Enron did when they had the whistleblower, Sharon Watkins, kind of came forward internally to say, hey, there's some things that aren't right here. And so in response to that, the first thing they did was they reached out to their outside counsel to see if they could fire her. Pretty startling. They didn't actually say, hey, what if we fire Arthur Anderson, or what if we fire, some of these other culprits? They wanted to fire her. And interesting enough, this is a very insightful document, because when Congress got a hold of it, the senators were extremely upset about this. It was like what one guy said, it's the ultimate in skullduggery. Like, this is absolutely the wrong thing that's happening here. And so what was revealing about this email that got so much attention was the fact that he was honest in terms of, he said, hey, there are no protections for corporate. Texas law nor federal law effectively protects whistleblowers. And so that really got Congress going, that we need to do something about that. But the one redeeming quality that I will say I found in this letter was the fact that although there was no protection for whistleblowers in Texas or otherwise, he said how important it was to keep the fact that this person made the communication confidential. And that would be crux to kind of my case going down the road. So, in response to these massive scandals, Congress passed the Sarbanes-Oxley Act in July 30, 2002. If you look at the picture, everybody's very happy. They're very proud with themselves. And by all accounts, they should be. It was a very well-written law. It was very well-intentioned. And it really changed the dynamics in terms of whistleblowers, because they really believe that at the heart of this, maybe this could have been solved if we would have had better protection, if more people would have come forward, if more people would have been listening to them. So in doing so, the Sarbanes-Oxley Act, at least from a perspective of employment attorneys, whistleblower advocates, corporate governance advocates, it was widely praised. And so you see some of the quotes I have on here. It was the most important whistleblower law to ever come out. It was you can see them here, but it was referenced as the promised land. This was really supposed to change things. And in many respects, it really should have, because Sarbanes-Oxley had some, in addition to a lot of compliance requirements, provisions in it, it had very significant changes in the law for whistleblowers, one of which being they wanted to make sure that anyone that had a concern had an avenue to do so. So they made it mandatory for public companies to have confidential reporting lines of communication, meaning the audit committee, a direct communication to the audit committee with your concerns. And so they were tasked with that, and Halliburton abided by it. As you can see, this is their code of business conduct. And so within their code of business conduct, they said, hey, we're in compliance. And they encourage employees to say, hey, you come forward. If you have concerns about questionable accounting or auditing matters, come to us. And they said, your confidentiality will be maintained unless in very limited circumstances would they not protect your confidentiality. And in doing so, they also said within the Code of Business Conduct, they highlighted that, hey, if you come forward anonymously, it's not going to be as helpful. Because they say if you come forward anonymously, we might have trouble investigating your complaint. So the root cause of the problem you might be wanting to get addressed might not get addressed. So furthering the notion that the promise of confidentiality was that much more important. But as you'll see later on as I talk about my case, how things change. The other thing Sarbanes-Oxley changed the landscape was it actually created criminal liability for anyone that would retaliate against a whistleblower. That's somewhat scary, right? It says you can up to 10 years in prison for retaliating against a whistleblower. That's pretty serious. Now, no one's ever gone to prison. I don't think anyone's even been charged. But there are probably various reasons for that. But nonetheless, the threat was there. And then finally, something that was very important was it pioneered jury access for whistleblowers, court whistleblowers, so you could have your day in court. It didn't apply for everybody. Like, for example, my case, I worked for Halliburton, and Halliburton had very restrictive, binding arbitration clauses in the contracts. So I never had an avenue for federal court. So the only avenue I had to push my case forward was actually through the Sarbanes-Oxley process. So now we'll start off, and I'll talk about my long, drawn-out case. You'll see all the twists and turns. But before I do that, let me give you a little bit of background of some of the key events that occurred. So I started working at Halliburton in March of 2005. I was a director of technical accounting, research, and training, meaning I was basically like a national office for Halliburton. But very quickly started seeing a lot of accounting problems we had to write off several investments. Very quickly we realized that there was a serious revenue recognition problem with the company. But we took our time putting out a memo. So by July 2005, put out a memo saying, hey, Halliburton has bill and hold transactions and we're improperly recognizing revenue. Although it probably upset a few people, there was a wide recognition that it was right. In fact, my boss even told me, hey, we're going to get out there and get it fixed post haste. We need to get back within the lines of what's appropriate. We got to repair whatever damage was done. So even though as painful as it was, I did find comfort in, hey, we're going to fix the issue. However, by October 2005, after they did some initial surveys, they realized this problem was too big to fix without a restatement. And so instead of correcting the error and restating, I was basically told by the KPMG audit executive to save it for the subpoena. At that point in time, Halliburton and KPMG had negotiated away the issue, and there was nothing left for he or I to do. So I contacted the SEC and the PCAOB in November 2005, immediately following the company's release of their third quarter 10Q. And this, again, is right on the heels of being told to save it for the subpoena, and there was really nothing left to do. So the SEC, I guess, sat on it for a bit, waited to see if the thing would naturally correct itself. And so during that time, I had conversations with the SEC and the PCAOB. And prior to the actual annual 10K filing, I think they still had a time to actually fix the issue. And so, however, they got wind that they didn't actually make the correction. And so in February 2006, the SEC contacted Halliburton. And so they were opening an informal inquiry into their bill and hold transactions and the revenue recognition practices, and amongst other things. So when I caught wind that the SEC was actually investigating, I felt it was my duty at that time to contact Halliburton's audit committee. But in doing so, I was very, very particular about ensuring that my confidentiality would be maintained. I studied the company policy on the matter. I studied the law about it. And so I felt confident, hey, this is what I need to do. The audit committee being the independent directors, I felt like if I didn't come forward and provide my name to them, they would have a hard time doing what they needed to do. Unfortunately, my email to the audit committee was routed through an inbox that was managed by Halliburton Legal Department. So instead of my email going directly to the audit committee, which is where it was intended to go, it was immediately forwarded to my boss, the CFO, KPMG, investor relations. And so, unbeknownst to me, that had happened. But nonetheless, another day, so I'm sitting at my desk, and all of a sudden an email comes across. And it's an email basically to me and I think 15 other folks that I worked with in the finance and accounting department, saying that the SEC has opened up an inquiry or opened up an investigation into my complaint. Effectively outed me as a whistleblower to everybody. Immediately, my life at work changed dramatically. No one would talk to me. Obviously, they're not going to, I get no emails. So you can imagine how it poisoned the work environment, if you will. So in February and March 2006, after being ostracized, I essentially said, hey, I do want to cooperate with the audit committee and the SEC, but I could really, under these environment, with this situation, how am I supposed to, I can't really go to work in this environment. So they put me on administrative leave. While I was on administrative leave, I filed my complaint with OSHA, saying, hey, I think my rights under Sarbanes-Oxley have been violated. They did their investigation. So now let's fast forward to September 2006, when the SEC notified Halliburton that they were not going to recommend enforcement action against them. And so in doing so, Halliburton was able to take that letter and present that, if they will, to OSHA or whoever. And so everything kind of fell apart in September 2006. My claim was dismissed by OSHA, my Sarbanes-Oxley case. The SEC had decided not to do anything, and I didn't really have much of a job to return to, so I resigned. So that was my experience. I lost at the OSHA level. But how were other whistleblowers faring, you ask, right? And if you could see this chart, can anybody even see the little sliver of gray? This is scary. So between the enactment of Sarbanes-Oxley in 2002 and December 31st, 2011, employees only won 23 cases and lost 1,237. That's a shame. In fact, they went 3 years without finding in favor of a single employee. 488 straight decisions went against the employees. Something wasn't working with the law. So what were my chances? It's February 2007. I had an attorney who was actually being paid by Halliburton to work with me to cooperate with the SEC investigation or the audit committee. So he was being paid by Halliburton. When Halliburton said, hey, we no longer need to pay your legal fees anymore, that's when he came to me and said, well, look, and you can see the letter here. He's like, we must be particularly blunt at this point. You don't have a case, essentially. And because you won't settle with Halliburton, I see no reason to be your attorney anymore. And the problem was, I didn't want to settle with Halliburton. It wasn't about money. And I particularly found this problematic because how can he be suggesting I settle with Halliburton for any amount of money, but at the same time saying that I don't have a case? So to me, that just made no sense. But nonetheless, he dropped me as a client. I didn't have an attorney, but nonetheless, I did have a case out there. I called around. I couldn't even find an attorney willing to take my case. But nonetheless, I wanted to keep going, so I had to participate in some of the calls with the judge and Halliburton attorneys for a while, and I had to keep asking for more time as I tried to find an attorney. But eventually my time was starting to run out, and that was right around the time that I got back in touch with Joe Ahmed. But here, seriously, I don't know, for anyone that doesn't know, Halliburton was the former CEO of Halliburton was Dick Cheney, and this was a time when he was the Vice President of the United States. So if it was 23 and 1,237, I think my odds were probably even worse than that. So I mentioned earlier about the fact that the SOX law itself was actually very employee-friendly. It was designed to really encourage and protect people to come forward. And so the scheme that they had set up made it very simple. So I want to kind of explain the elements of the case because we're going to kind of revisit them as we go through so you can understand the nonsense. So essentially, in order to prevail as a whistleblower, you have to say you engaged in protected activity. So in order to say the protected activity could be either you had a reasonable belief that the accounting rules that they were violating, you had the reasonable belief that, or you participated in a proceeding, meaning that there's some official investigation. Not meant to be particularly difficult to meet. Okay, then you suffered an adverse employment action. That's where it gets a little trickier. And then finally, if the protected activity was a contributing factor to the adverse action, meaning whatever they did to you, was it because of or related to your blowing the whistle? But that standard is not meant to be difficult to meet. In fact, it's as easy to meet as through just temporal proximity. Judges have found, hey, if you blew the whistle and 6 months later you're fired, that's probably good enough for us. So 2 of these things are designed to be extremely easy to meet, if you will. Now, so once you state your case as a whistleblower, the company has a much more difficult burden. So what they have to be able to prove with clear and convincing evidence that the retaliation that you suffered, that they had a legitimate business reason for doing that. That's a pretty tough hurdle, you would think. Okay, so what were the arguments? Mine. Yes, I engaged in protected activity. I had a reasonable belief they were violating the accounting rules. There was an investigation in the audit committee. That was pretty easy. Adverse activity. I argued that the minute that they outed me in violation of not only the SOX, but also company policy that violated an important term and condition of my employment that I relied upon, and then everything else that kind of followed that in terms of being, I wasn't invited to meetings. I was ostracized. I was basically persona non grata. It was a difficult experience. Now, could there have worse things have happened to me? Most definitely. But it was enough for me to know that it was retaliation. I lived it. I felt it. Now, what I'll find out is that even though, so earlier I said my attorney dropped me and he said I didn't have a case. So essentially, he wasn't all that wrong, right? Because the adverse actions at the time, the only adverse actions that were acceptable were tangible employment actions. Means you got fired, you got demoted, But like I like to say, there's a lot of things a company can do to you absent firing you. So especially if you're a multi-billion-dollar company, do you really need to take the chance of firing somebody? No, there's a lot of other ways to deal with that person. Halliburton's argument. Halliburton basically said, hey, he didn't have a protected activity. His accounting was unreasonable, so therefore he didn't have protected activity. And also he didn't participate in the proceeding because the SEC didn't do anything. The SEC, he gave them information, the SEC didn't do anything. That was their argument there. Adverse activity, what they did was they compartmentalized everything that happened to me. The outing, the ostracism, the diminished value, that's not inviting me to employees, taking responsibilities away from me. What they did was they attacked each one and compartmentalized them and said, hey, that's not that bad. But the worst of the worst is the outing itself. Their case was, well, you know what? We didn't think we were harming the guy. We thought we were doing him a favor by outing him. And in fact, God, we had to out him because how are people going to maintain the documents? Hey, there's an investigation. This is a document hold notice. How are we going to, you would almost think that those are pretty absurd arguments. So the hearing. So this isn't really meant for you guys to all read it, but these are excerpts from the trial testimony. So while I was at Halliburton, I wasn't there long enough to get a bad performance review. In fact, I did get positive performance review, comments, etc., except for the fact that I wasn't being politically sensitive enough in terms of this topic. But nonetheless, never had a performance review. And so it's a legal case. We had discovery. I requested documents. They requested documents. I got a stack of documents this high. And I get them in the mail. I'm flipping them. And I get to the bottom, the second to last document there. What was it? It was a performance review. The memo started off as, this morning I met with Tony. And in addition, Charlie Gear was in attendance. And we had this discussion and this scathing review about my performance. Well, that never happened. I wasn't there. I was in California. I had never, and it was like, holy crap, how did this get here? So what McCollum had to admit at his deposition and again at the trial was that, yes, that meeting never occurred. What was his defense? Well, I was going to be a busy guy that week. And I'm going to kind of go ahead and get it out of the way. Amongst other things. So in addition to that, they got testimony from someone to come in and they said, hey, JR, this guy's performance, was it ever not up to snuff? Did you ever see a situation where his accounting positions were unreasonable? He testified at length. Oh yeah, there was one time. It was related to a joint venture called FiberSpar, and Tony thought it was a FIN 46 issue, which, yeah, we ended up having to write it off, but it wasn't a FIN 46 issue. It was a equity method accounting issue. So yes, I think he was wrong. Well, it wasn't hard to disprove because I handed the memo to my attorney, who on cross-examination goes up to me and says, hey, earlier you said that you found that he had an unreasonable accounting position. It was what was related to fiber spar. And he said, yeah. And so he hands him he says, turn to page whatever. Here's Exhibit 23. And what is it? It's an email from J.R. Solt to me and others on there saying, hey, very good, concise summary. Good work on the fiber spar issue. Right? And then my attorney says, well, heck, let's look at that. Here are the errors listed. Tony listed the errors. And you said earlier it was a FIN 46 issue? There's nothing in here about FIN 46. It's pretty clear. He says the error was related to equity method accounting. He's like, oh, well, I don't know, my recollection, whatever. They also asked him, said, hey, did you have any other negative feedback on the guy? He said, well, I got some negative feedback related to some revenue recognition training classes he had given. All right, so my attorney says, okay, well, say, well, did you ever put it in writing? Did you ever tell him you were getting negative feedback? No, I never did that. Certainly never put anything in writing about his negative feedback. No, I never did that. And then he said, turn to exhibit whatever. What is it? It's an email, and it's from one guy sending it to JR saying, hey, Tony and his team did a fantastic job delivering a message that no one really wanted to hear, but the trainings were great. So J.R. Solt takes that and sends it out to copies of my boss and amongst other people, say, hey, great job, getting good feedback. And so my attorney's like, is this what you meant by negative feedback? Did you ever, so did you think about it at the time going, hey, I want to be fair, Tony. I mean, yes, this is positive feedback, but on balance, I've got some other things. Did you ever say that to him? Of course not. So there were a lot of very interesting aspects of the hearing. It was a 3-day hearing, one of which was J.R. Solt's testimony, where not only was he, taken to task and the two things related to my performance, but also he was beaten up pretty heavily on the accounting issues, which we'll get to later. And on the way off the witness stand, one of my attorneys overheard him. He was all mad. He walked by and he kind of tapped Carl Jordan and said, thanks for setting me up, bub, and walked out. He was all stormed mad. So it was an interesting 3 days for sure. Now, for whatever reason, Halliburton tried to, in their opening remarks or whatever, pitched me as, hey, this guy was the Lone Ranger, Now, most of you are probably too young to know much about the Lone Ranger, but I guess there was a more recent movie with Johnny Depp. But anyhow, Lone Ranger was somewhat of a hero. And I wake up the next day, day 2 of the trial, and I open up the front page of the business section of the Houston Chronicle, and here's this huge article, support for a Lone Ranger. And I was like, wow, this is, something else. And it really made me feel good. I mean, some of the things he said in there. But most importantly, I think that he said, in some ways what matters most is not whether or not I was right or wrong, but I had the guts to stand up. So I'm not sure how effective their characterization of me as the Lone Ranger actually was. Okay, so we had the trial in 2007. About a year later, get the decision in order from the ALJ, and I lost. Basically said I failed to prove that I had engaged in protected. He basically failed to prove that I had any adverse actions against me. Here's the interesting thing. So at the trial, I told you earlier, in order to meet one of the requirements of the case was to say you had a protected activity, meaning you had a reasonable belief that the accounting was wrong. Let's keep it as simple as that. And that's all he had to do. That's all the judge had to do to say I met that burden. But he went one step further. He said, okay, fine, I'll give you the fact that you had a reasonable belief at one point in time early on. But certainly by the time the SEC and everything else happened, you were unreasonable. But nonetheless, he had to give it to me because the law was as it was. And so he also justified, and strangely enough, he also justified all the things that happened to me as, well, that's a natural consequence, of course. You were an agent of the SEC. Of course they're going to treat you that way. So essentially, apparently I wasn't a an employee of Halliburton, I was an agent of the SEC. And in doing so, he went well beyond the pale in terms of his decision in saying that I was working full-time with the SEC. Which could be no farther from the truth. At the same time that the judge was saying that, Halliburton was arguing that, hey, he doesn't even have protected activity because the SEC didn't do anything. I wasn't working with the SEC ever. And so, the reluctance and the isolation and all that was really just because I was an agent of the SEC. Of course, you basically accuse your coworkers. What do you think is going to happen? So I lost. What we did, we put on a good trial. So quote here, he who represents himself has a fool for a client. But I had no choice at that point. We put on a good trial. My judge, my attorney, Joe, I have utmost respect for him. I totally respect his decision. But he's like, no one wins these cases. It's the end of the road, Tony. And I respected that. But I had nothing else to lose. And so from that point forward, I was representing myself. And throughout this process, I learned quite a bit about what the law required, what the process was. And I was also learning on the job because outside of working on my own case, I was also doing litigation consulting. I was doing forensic accounting litigation consulting, working with law firms actually prosecuting this type of thing. And whereas I was sitting there working with attorneys, deposing audit executives or accounting folks, so I was actually, kind of making myself better throughout all that. So I totally felt like I could handle this. And so I went on. So here's my initial brief, respectfully submitted by me, not an attorney. But I thought it was extremely important at this time. I had to go forward. And as you can read, this was my main case right here. These are my main arguments. The ALJ's opinion was so based on this fundamentally mistaken belief about the relationship between me and the SEC. It really called into question the entire decision. And his decision was not only that, but it was also colored by his belief that I was just absolutely wrong on the accounting. But finally, the most important aspect of why I went forward was because there was an extraordinary seriousness to his opinion. Meaning that one of the most fundamental aspects of Sarbanes-Oxley was actually creating the open lines of communication so people could feel comfortable coming forward. So the law mandating confidential communications. So if his ruling was allowed to stand, it basically eviscerated the entirety of SOX whistleblower protection. Because you would have to have no reason for outing the whistleblower, and that's probably the most effective way to managing your exposure if you have an issue. So let's see, I filed my first appeal. This is in 2008. A couple years later, I won. I got a very favorable ruling from the appeals board. And the ruling had a significant impact at the time, as you can see from some of these headlines in the legal community. It increased protection for all whistleblowers. All of a sudden, now whistleblowers can claim a very broad spectrum of adverse actions. So more whistleblowers are going to have a chance at success. So hopefully we're going to turn the tide from the 23 and wins and 101,237 losses. Hopefully that tide was going to start turning. But it wouldn't just yet, because there's still more process here, right? So you had people say, hey, this should be a clarion call to companies that you need to protect the confidentiality of the whistleblowers. So one of the reasons I thought that they didn't think I had a case was because I wasn't fired, demoted, right? There wasn't that tangible employment activity. So what this really expanded it beyond that to say anything that would essentially deter someone from coming forward could be qualified as adverse action. So, let me say, back up here. It wasn't a wholesale victory, because what the appeals board said was they affirmed part of the decision, reversed part of it and remanded it back, meaning that they affirmed one aspect of the judge's ruling, which was that I engaged in protected activity. And they certainly didn't go as far as to evaluate whether or not that protected activity was reasonable beyond the fact, because it didn't matter. So that was the one thing that they affirmed in his ruling. But they reversed the aspect of whether or not I had an adverse employment action against me. And then they remanded back to him to make a determination as to whether or not the adverse action was related to the protected activity, which is very interesting in my case. As the ALJ will point out, that it's metaphysically impossible to separate the two, because the adverse action was the protected activity. It was really the start of the adverse action. And so what he did was he seized on language that I had pointed out earlier, was that, if a company can demonstrate through clear and convincing evidence that it had a legitimate business purpose for the adverse action, it could survive liability. So what do you think the ALJ did? Boom. He dismissed my case again. But he went to extraordinary lengths in order to do so, because this time he was limited. The only argument he could make was that Halliburton had a legitimate business reason that was satisfied through clear and convincing evidence. And so basically the case was, they all thought he was doing him a favor. Mark McCullum testified that he thought I would appreciate it. So he said, hey, no one meant to hurt you. They were actually trying to help you. They thought that if you would know that, hey, your concerns were being investigated, right? And on top of that, he obviously said, well, how in the heck are they going to retain documents if they don't know you blew the whistle? Well, pretty easy. Just like the ARB eventually came back and reversed him, but it's pretty easy to do. The SEC didn't have to give them my name to tell them to retain documents. It's unnecessary, absolutely. And it doesn't matter whether or not you can make a case that you didn't mean to hurt somebody, because the fact of the matter is it's irrelevant. So what the ARB came back in their revising his case, they basically said that testimony was neither credible nor even relevant. And they said, in fact, no reasonable chief accounting officer would assume that exposing the whistleblower would be a welcome event. Nobody. So, but this time, he went even further. So he strengthened his language to really, elbow me here. He said, his reasonable belief ended when the SEC completed its investigation and concluded he was wrong. Again, that never happened. In fact, what I pointed out in my briefs was the letter that the SEC sent was very clear. It basically said, at this time, we are not recommending enforcement action. And that this letter in no way can exonerate anybody. It's not the approval of your accounting practices. It's simply this decision not to recommend enforcement action that could have absolutely nothing to do with the merits of the case and everything to do with possibly, resource constraints and so forth and so on. So in warning, saying this document should not be used in any legal proceeding. It should never be used to give the appearance that you've been exonerated or we approve of anything. But that didn't stop Halliburton or the judge from using that against me. So I also want to point out, when we were at the trial, during the hearing, we offered up as expert testimony, expert witness, we had Douglas Carmichael. If anyone in here knows who he is, he's a very well-respected professor. He was actually the chief auditor at the PCAOB when they were laying the framework for what the PCA was supposed to do. So he was kind of the chief architect in dividing, kind of setting that up. He was also had written an article years earlier called Hocus Pocus Accounting, dealing with Bill and Hold, in which he won awards for, et cetera. So we did not think it was necessary in the least bit to introduce Doug Carmichael to weigh in on this accounting issue because it was so blatantly wrong. But nonetheless, we had it. And so the first day of trial, my attorney goes up there and says, hey, we'd like to introduce into evidence this report. Immediately, Halliburton's like, sidebar, so they went back in the judge's chambers. Came back, and my attorney says, well, you know what? Judge is saying we're not going to put that in there. He said, you know what? We don't, because he didn't think we're going to need it. But if it turns out later on we need it, yeah, he'll reconsider whether or not he should introduce it into the record. Okay? So during the post-hearing briefs, we're writing the briefs, I said, hey, you know, Halliburton's, in their case, they're arguing that I only have protected activity because my accounting position was unreasonable. And I'm saying, I re-urge the court to introduce the Doug Carmichael report as evidence just to support that my belief was reasonable. Nope, wouldn't do it. And so, nonetheless, so he went beyond the pale in terms of reaching this conclusion that, for all intents and purposes, was absolutely unnecessary. He didn't have to go there. Well, interesting enough, so what the ARB said, my case expanded the definition of what's an adverse action, so it allowed for more cases, hopefully more successful whistleblowers going forward. But the other thing that came out of this was the fact that, so I said earlier, one of my reasons the attorney dropped me was because there was no money in it. There were no damages. So if they didn't fire you, they didn't terminate you, you don't really have any damages, no quantifiable damages. And so as I was going through this process, you have to ask for something. And so I only asked for $1,000. I never, that was it. I just, my point was it has nothing to do with money. But what came back was the ARB said, hey, that's just insufficient. They poisoned the work environment, the loss of professional reputation, et cetera, emotional distress. I mean, this is absurd. I said, so we sent it back to the judge to say, hey, you need to find damages, if indeed, the causation issue was there. So the ALG came back and issued 2 alternative findings. One basically saying, hey, I think I'll give him $1,000. That's all he deserves. And part of it was he never asked for any money, so clearly he wasn't hurt. He didn't go at length at trial about how damaging it was to his personal life or his emotional distress. That was purposeful. Yes, this was a difficult experience. It was a stressor on my family. It was all those things. But there was no way in hell I was going to get out there and allow them to probe into my personal life because of this. My personal life had nothing to do with this. So I never claimed I had emotional distress. I never asked for any money. But that was the argument they were using against me, that I didn't deserve anything. But nonetheless, he said, well, in order to speed things up, because I'll probably get reversed again, I'll go ahead and have an alternative award of $30,000. So the ARB fulfilled its prophecy, and then March 2013, they basically reversed them again. And they say, hey, without such an award, he would have no remedy for the retaliation by Halliburton that so poisoned his work environment that he felt compelled to resign from a job they loved. And I did. I really, outside of the stressor and all the problems I had, I loved what I was doing. I loved consulting on the accounting. I loved teaching classes. And so I truly did enjoy what I was doing. So you think, is that the end of the road? You finally won? Well, not yet. Because it's still just, 2013? All right, so I never had an avenue in federal court, but Halliburton does. So they appealed the ARB's decision into the Fifth Circuit Court of Appeals, which is notoriously one of the most conservative appeals courts in the country. And you can see some of the things that they were saying, that this was outcome driven. They ignored SEC guidance. They ignored their own guidance. They went out of their way to get to the conclusion it wanted. And you can see it. This is what they're saying about the appeals court in my case. Not only that, so that was Halliburton. But you had some lawyers representing companies, employment lawyers. For example, here's an article. No good deed goes unpunished. Okay, yeah, what are they talking about? Me? No. It's no good deed goes unpunished. Just harmless, innocuous document preservation notices. All of a sudden, you got to be worried about them. How are companies going to manage their litigation? You almost can't make this stuff up. But they totally missed the point. Okay, so let's go back in time. So Halliburton appeals, Fifth Circuit responds in November 14th, 2014. Finally, I got a win, right? Halliburton can't reverse the SOX retaliation claim. And so it was a very important decision in terms of their findings. Because now it basically, essentially, Halliburton's only avenue at that point was to go to the Supreme Court. But essentially this was, for all intents and purposes, the law of the land for whistleblowers now. So whistleblowers can breathe a sigh of relief, if you will. And I did, November 14th, 2014. That was a big day for me. I thought, okay, gosh, you think it's finally over, right? Of course they could appeal to the Supreme Court, but nonetheless. So we got the ruling, and then my attorney started getting nervous. Wait a minute. We haven't gotten the stamp of approval. We haven't, because what happens is they issue a decision. It's a final decision. But then there's an administrative process to say, okay, nope, it's final for sure. So I don't know what that process is. I can't remember what it's called. But hey, man, they started getting nervous. Say, hey, maybe we should settle. Maybe we should, I'm like, what the heck? No, this is a slam dunk. It was a 3-0 decision in my favor. It was rock solid in their findings. What can happen? Like, I don't know. Just thinking maybe, and at this time, Jesse Eisinger was working on the story that was published in ProPublica and elsewhere. And they're like, hey, maybe you should tell Jesse to not run the story because we don't know. Something's going on at the court. We might, you don't want to go out there and say you won and then, just, lost. And I called Jesse. I said, hey, I don't know what's going on, but my attorneys are suggesting that, maybe you should hold the story. He's like, there's no way I'm holding the story. We're running it. I was like, well, good. Because I have all the confidence in the world, nothing's going to happen. Well, wow. This was a shocker. So what happened was, because I'd done the work. So what the federal courts, the way they work, so they break it up and they have panels. So like a 3-judge panel oversees my case. So they have, let's say there's, 8 plus 7? Any mathematicians here? What is that, 15? So there's 15 judges that work in the Fifth Circuit Court of Appeals, and what they'll do is they'll break it up. You 3 take these cases, you 3, and they mix them all up. Unlike the Supreme Court, where you see those cases, they're in front of the entire court. That's called an in-bank hearing. And so there is a process for an in-bank hearing at the federal circuit level. However, read this. This is from their own practice manual. A petition for rehearing in bank is an extraordinary procedure. It's intended to bring to the entire court's attention an error of such exceptional public importance or an opinion which directly contradicts with the Supreme Court. So they say, hey, don't do this lightly, guys, because of the extraordinary effort that goes into it, you're wasting our time. We could easily impose sanctions on you. So that's a little warning. Don't take filing a petition for an in-bank review lightly. What about the ones that did file in-bank petitions? So what happens is you win or lose a case, the moving party can file the petition for in-bank hearing. So in the period that I looked at here, around that time, there were actually 224 petitions for in-bank hearing, and only 3 were granted. Wait a minute. Halliburton didn't even file a petition for in-bank hearing. What's going on here? The judges took it upon themselves. Behind the scenes, I didn't even know what's going on. They took it upon themselves. And they had a vote, and at the end of the day, I won 8-7. That now that my decision that the Fifth Circuit Court of Appeals originally ruled out, I was victorious. But 8-7. I'm like, wow, this doesn't seem like it's that controversial. It doesn't seem like it's something of such exceptional public importance that, you got to fix this tremendous error. And so I said, all right, well, let me look at this. So I was interested. I said, well, who are these judges? So judges are all appointed they're all presidential appointments. And so I said, all right, well, So I said, okay, every single justice in the Fifth Circuit that was appointed by either Bill Clinton or Barack Obama voted for me. I was like, interesting. I said, all right, well, let me go to the other side. Every single presidential appointment from the first George Bush or Ronald Reagan voted for Halliburton. I said, whoa, wait a minute. This is too odd. I said, what about these 6 guys? Well, they were all appointed by the compassionate conservative George W. Bush. And they split down the middle, 3 for me, 3 for him. And I was like, oh, man, you can't make this stuff up, can you? So, point being, yeah, it's all about who's actually applying the laws, who's actually, adjudicating the cases. So now what I'm going to do is change over to, that was my whistleblower case. Now what I'm going to change over to the accounting issue. Okay? And I don't want to scare anybody. I probably got a lot of accountants in the room, but this truly is not a complicated accounting issue. Okay? And, I had to throw this in there, but see that picture there? That was me when this all started. See what whistleblowing will do to you? But as I laid out in my opinion, there's nothing complicated about this. Halliburton has been improperly accounted for bill and hold since SAB 101 came out in 1999. In fact, the only thing complicated about their accounting is the lengths at which they went to cover it up. So, okay, interesting. Hocus pocus accounting. All right. Former SEC, I'm quoting here, right? Former SEC chairman recognized, basically said, bill and hold transaction, that's hocus pocus accounting. Described it as how companies manipulate their recognition of revenue, so forth and so on. It's long been associated with financial statement frauds. Bill and hold scenarios frequently arise in the oilfield service sector, and meeting the bill and hold criteria for an oilfield service sector company like Halliburton would be rare. Where do you think I got that from? KPMG, Halliburton's auditor. Bill and hold transaction in the oilfield service sector. Authored by John Christopher, who I worked closely with. I consider him a friend when I was there. But the problem is, KPMG was gearing up for their big energy conference, right? So let's talk to our energy clients, and they reached out to the Halliburton audit team and said, hey, what are some of the big issues of facing KPMG and Halliburton? Say, hey, why don't you write something on revenue recognition? So John wrote something on revenue recognition, sent it in to national office, and they basically just said, they scrapped the whole thing and wrote this in their national office, sent it back. So this is the exact accounting issue that I was complaining about. And the reference, hocus pocus accounting, the quote was, yes, Arthur Levitt's famous speech, back in whatever it was, 1999, did call out Halliburton as hocus pocus. Not Halliburton. It did call out revenue recognition schemes, et cetera, as hocus pocus accounting. But more to the point, the hocus pocus accounting reference came from Doug Carmichael's article published in the Journal of Accountancy entitled Hocus Pocus Accounting. And much of which you will read in the KPMG article, I'm not going to say they plagiarized, but there's a lot of, if you were to take them and match them up, there's a tremendous amount of consistency between what KPMG's office and Doug Carmichael. The same individual that the judge wouldn't allow his report in there to prove that my accounting was reasonable. Okay, so that's an article written by KPMG, but what about the evidence within Halliburton? What did its accounting policy say? Pretty darn clear, right? So if Halliburton, if it's equipment in Halliburton's warehouse, these are bill and hold transactions. Training presentation. The SEC has taken a hard look at bill and hold. They talk about if it hasn't been delivered to the customer's place of business, these are bill and hold. So, okay, move on. A white paper written in 2003 or 2004, basically, again, if you still have physical possession of inventory you sold, you can't recognize revenue unless you meet the bill and hold criteria. Absolutely consistent to the T. Like the SEC rule, the Carmichael article, KPMG article, all the policy trainings, everything was in line with that. And in fact, as we were debating the discussion in an August 1st meeting in 2005, McCollum's like, as they were debating, hey, can we get around this somehow? He even highlighted, oh my gosh, Chris recognizes that physical possession throws you into bill and hold, and it's in the memo. What are we going to do about that? So, very clear. You want to recognize revenue. If I'm selling you a bottle of water, I don't get to recognize the revenue on this bottle of water to like give you the bottle of water, right? Let's say this is my headquarters, this is my warehouse. I don't get to recognize revenue when I put this bottle of water right here, do I? No, it's that simple, folks. It's actually even simpler than that, and I'll get to it. The crux of the issue is delivery, right? So this came out of my July 15th, 2005 memo. Basically, delivery for accounting purposes doesn't occur until you actually physically deliver it. As long as it's in your physical possession, you have to meet the bill and hold criteria. There's nothing controversial about this at all. In fact, I will say how the consistency of my conclusion right here matches up almost verbatim to the policy, the training materials, to KPMG's article, and to the SEC guidance. And J.R. Salt, and if you read the article, I did record three meetings. And at that meeting, J.R. Salt says, well, the crux of the issue is delivery. It's not title, it's not risk of loss, it's delivery. And guys, I have to be honest here, where I struggle is delivery and title are two different things. Based on my experience, whenever we're in physical possession of inventory, I default to ask the questions about bill and hold. I'm just saying more evidence to show clearly there was wide recognition of what the right accounting was. So I get called in, after issuing my memo, I get called into McCollum's office, my boss, chief accounting officer. He laid it out. So the issue that developed here, and I'm just going to lay it on the table, okay, is now that your memo's out there, and quite frankly, it's a good memo. Jerry and I have had a lot of conversations, your conclusion's appropriate, so forth and so on. I mean, you can read it. JR is very concerned about the issue, if you will. And so if we have a policy out there causing people to do things incorrectly, we need to get out there and get it fixed post-haste, and then address how big of an issue we have and get back within the lines of what's appropriate. So he's in recognition, well, what do we got to do is we got to repair the damage from the flow chart, because obviously the accounting policy had their stuff, it told you what to do. So it's like basically what's going wrong here? Well, that's because even though the company policy and accounting memos and all the training materials basically said these are bill and hold transactions, you got to meet the criteria, well, what was everybody using? Well, they were using this nifty document right here called the bill and hold decision tree, which is so flawed. I mean, I don't even know where to begin, but essentially it starts with, okay, so if you pass title, recognize revenue, and if you don't, come over here, meet some undefined criteria, recognize revenue. So John Weil, who used to write for the Wall Street Journal and at the time was at Bloomberg, he's a very good writer. He's very good at what he does. He got a hold of this, wrote a very good article about, hey, Halliburton's accounting might make you wonder. And so in doing that, he had the evidence, he had the document, he sent it out to several professors, one of which was Charles Mulfer. Is like, hey, this is black and white. This is clearly at odds with GAAP. This is absolutely wrong. I mean, you don't even need to be an accounting professor to say this. And I think Charles will even say that. You don't need to be an accounting expert to weigh in on this thing. So at the end of the day, KPMG ignored all its own guidance. So in the back of that article, it talked about how these bill and hold transactions are really risky. It's really important to get the audit committee involved, it's management, and heck, if you're a public company and you have bill and hold transactions, what do? Well, you should get pre-clearance from the SEC. All right, so what else was going on around this time that might have caused some problems for KPMG in terms of fixing this issue? So KPMG had to pay $456 million in fine. And then also they had to go on because of the deferred prosecution, meaning we won't prosecute you for your criminal activity. I'll shut you down like we had to with Arthur Anderson if you can just maintain probation for a year. So if you guys can be on your best behavior for a year, we'll just let this go. So lessons learned. This is a quote from the article too. To say the outcome has stunned legal experts is an understatement. Heck, accountant beats Halliburton. The government tries to beat Halliburton and loses. So I'm pretty proud of that. And I think so. I think my time might be up.